Hey, I'm Jonathan Wild, and in this video we cover how to use specific identification for inventory costing. To use the specific identification method, we need to be able to identify and match each individual inventory item to a specific purchase and sale. This type of inventory costing is useful for custom and one-of-a-kind items. For example, if we ran a business selling custom artwork, the cost of a painting of a llama riding a scooter underwater will be different than a painting of a room made of pizza, which will be different than a painting of Martians playing tennis, and different than a portrait of a stylish cat. In these situations, specific identification usually best matches the cost of the item with the sale. Okay, let's do an example. Assume our records show that on May 1st, we had 20 units in inventory that had cost $30 each. On May 3rd, we purchased 30 units of inventory for $35 each. On May 11th, we purchased 5 units for $45 each. And on May 28th, we purchased 10 units for $48 each. We take that information and fill it into the goods available for sale column. Next, we need to determine our cost of goods sold. Our company's accounting system tells us that goods sold includes 20 units from May 1st beginning inventory, 30 units from May 3rd purchase, and 10 units from the May 28th purchase. When we add each of these items, we get 60 units sold and a cost of goods sold of $2,130. This amount is the cost of inventory sold during this month and will be reported on the income statement. Last, we need to determine ending inventory. This is computed as goods available for sale minus cost of goods sold. So first, we see that of the 20 units available for sale from May 1st, all 20 are now sold. Of the 30 units from May 3rd, all 30 are also now sold. Looking at the 5 units from May 11th, we see that none of the units have been sold, so we have 5 units left in ending inventory. And looking at the 10 units from May 28th, we see that all 10 units have been sold. As a result, we get a total of 5 units remaining in ending inventory with a cost of $225. And total ending inventory is reported on the balance sheet.